What's going on, traders? We are doing today a lesson on candlestick patterns. So we want to know what a bullish candlestick is versus a bearish candlestick is, okay? Now, a lot of people misconceive the color. So the color is irrelevant sometimes. Sometimes the color is relevant. So we're going to go into the lesson on how to read candlesticks, okay? So number one, first, let's look and see what a candlestick is, okay? A candlestick, I'm going to check and show you what it looks like on a chart, okay? So on the chart, this candlestick pattern is going to show you where the stock price is most likely to go after a specific candlestick. So for example, we're looking at HJLI right now, okay? You see that this is a big green candlestick. It has a big long wick. It's what we call them at the top, just like a candle. Has a wick, and then the next candle is above the previous candle, but it's red, okay? Now, hold that thought. Let's go back into what the definition of a candlestick is. Okay, so the candlestick is comprised of four different aspects, okay? Four different aspects of a candlestick. It is comprised of an open, number one. Where does the stock start the day? That's an open, okay? Each candlestick starts as one small line, okay? Each candlestick starts as one small line. As the price moves up or down, that's how the candlestick fills in. But let me not get ahead of myself. Candlestick is comprised of four things: an open, a close, a high, and a low. Say that again. An open, a close, a high, and a low. All right. Now, there's different candlestick patterns which are going to indicate whether the stock should continue to rise or the stock should continue to fall. Okay, now whenever we look at a red candlestick, okay, notice how it's the opposite of the green candlestick as far as where the open and the close is. A red candlestick opens higher than it closes. A green candlestick opens lower, but most importantly, it closes higher than it opened, okay? So green opens lower, okay, and closes higher. Red opens higher and closes lower, okay? Now, same as on the high and the low. The high means that at the high of the day, the very highest point of this candlestick is the wick that you see touching a certain price level. The low is going to tell you what the low of the day is. So let's go to a well-known stock like Tesla. TSLA. So Tesla, right now we're looking at Tesla candlesticks, okay? These are all dailies. These are all dailies, okay? So we see on this candlestick here, we're going to say that's 1210, okay? We got a green candlestick, which means the close is going to be higher than the open. It opened up at 573, came all the way up to 627, and closed there. It closed at the high. Now, this small wick was the low, but because it closed at the high or near the high, you don't see a wick, okay? Let's zoom out. Let's zoom all the way out. All right, now let's look at this candlestick. These candlesticks, for instance, okay, on 3-4, when the market was pulling back really hard, look at this candlestick. So we're looking at an open of 658. Okay, this candlestick goes all the way up to 870. 873.94 to be exact, okay, and pulls all the way down to 606 That's a move of over $200. But then it closes around 620. Okay, we'll repeat that again. This candlestick opened at 656. At some point during the day, it went all the way to 868, came all the way back down to 602 at some point, but it closed at 618. All right, now let's look at a green candlestick that looks similar. Now, what's the difference between this red candlestick and this green candlestick? They look almost alike, but why is this red and this one's green? Because this green candlestick opened at 690 and it closed at around 720. Now at some point it ran up to 870, actually 872 to be exact, and pulled all the way back down to 685 and 5 cents to be exact. So just because it's green doesn't mean that it didn't finish up higher than the day before. Or if it's red, it didn't finish up higher than the day before, because stocks do that. Stocks pull back and they run up, and it seems like it would be a red candlestick or a green candlestick, but it's red. Let's get an example of that. Hope this is making sense. Okay. Check. All right. Perfect. Prime example. Now, look at this candlestick. This is the example I wanted to use. Look at this candlestick, okay? You're looking at a candlestick that is up over 100%. It was up well over 100% before the trading day was over with. But here we have a gap up. A gap up means that there's a gap in between the opening from the previous day and the opening in the day before. Don't let that confuse you. So now this candlestick is well above where it closed at. So why is this candlestick not green? See, a lot of people confuse upward price movement or gap ups with green. A green candlestick, yes, your money is green, your account is green, because if you're buying here and you're selling anywhere up here, then you've profited. But the reality is we started around $4 a day on this candlestick, ran to $4.49, but we closed all the way down to $3.07. So this is why this is a red candlestick, because even though it gaps up, it closes lower than it opened. Okay, so you can make money, plenty of money on a red candlestick. Just know that that's why it's red. That's why this candlestick is red and not green, even though it gapped up quite a bit. Okay, now let's go back to Tesla. Now, the longer the wick, let's talk about wicks before we go. The longer the wick, the more likely that the price will reverse. Okay, so when I get a long wick to the top, that means the price should continue to go towards the bottom or downwards. When I get a wick towards the bottom, that means the price should reverse and start to move back up. Let's see if we can get a good example here. So, once again, we see here, we'll use this for an example, HJLI. We see this this stock open up or close at $8 the previous day and run all the way up to almost $20, $17.68 to be exact. Now, when you see this long wick, that means the rally is pretty much done. This long wick means the rally is pretty much done. So immediately we see that it runs up to $18, almost $18, and sells all the way back down to $7. Why? Because this is what we call price rejection. Okay. At one point, this whole candlestick was green. Okay. At one point, the whole candlestick was green. Now you see sellers taking profits. They're saying we don't accept this. We're rejecting these prices that are too high. So we're going to sell this off. So this fat green bar, which it would look more like this, a complete green bar, okay? This big green bar ends up turning into a long candlestick wick, okay? And then the sell-off continues, okay? Now, if you get this price movement towards the bottom, perfect example, GameStop. When you get this towards the bottom, okay, you see this long wick towards the bottom, okay? It rejected the price. So it opened up at 260, ran to 480, but when it got all the way down to around $100, the market said this price is too low, and it rejected the price. So you get a run all the way back up to $180, and then the next day it gaps all the way up to $380. Okay, so when you see this long wick towards the bottom, you know that the stock is probably going to move up. When you see a long wick towards the top, then you know the stock is probably going to move down, just like it did. Okay, now candlestick patterns, last thing. There are so many candlestick patterns. We're not going to go over all of them, but we'll go over some of them. All right, so look at these candlestick patterns. These are individual, so we won't go over these. Let's go over the combinations. So bullish harami, this is one that I like to use, okay? So just let's pretend this black is green, okay? Black means positive or green. Red means, white means negative or red, okay? So when you look at this bullish harami, okay, I'm sorry, opposite. Green or red, green, okay? Red, green. Either way, when you look at a red candlestick, okay, but it has a positive green or white candlestick within the body, that is a bullish candlestick pattern, okay? When you have the opposite, if this is the opposite, if this was white and this was black, then it would be bearish, a bearish harami, okay? Bearish harami cross. All right. Bearish harami cross. So just like this harami was inverted, okay? So now you have the opposite. You have the white candlestick, the white positive candlestick, but now you have a cross or a red bearish candlestick inside of this body. It's called harami. Engulfing means that you're looking at a red or a negative candlestick that completely engulfs, that completely surrounds this white or positive or green candlestick. Okay, so enough for you to study up on. It gets deeper than this. There's lots of different candlestick patterns that you can look at, okay? But for the most part, just understand that when you have a long wick, okay? When you got a long wick, you're looking at the price moving upwards, opposite of the long wick, pointed down or up. When you get a wick that's pointed down, or a wick that's pointed up, then you're looking at bearish. You see it says bearish because the price has been rejected. Okay, the price has been rejected, and the stock should continue to sell off or move downward. Okay, so again, let's put this up on a chart. Cost, all right, and now we see, look at these wicks. Look how long these wicks are. That means this price has been rejected by the market. It tried to retest again, and then it got rejected again. So now if you're shorting this, at $73 or anywhere up here, you get a nice move down to